This is Joe Rabil with Rabil Stock Research. What we're going to do today, I want to follow up on the discussion of moving averages and go into a shorter moving average, the 4MA, how I use that in conjunction with the 18 or the 20 if that's your preference. I think this can be very helpful, especially when we're dealing with all the volatility. Like we've got a lot of volatility right now. It seems like it's not going away. So I think we want to learn how to use this short-term moving average to our advantage. So we'll go into that in the lesson to start. I also want to talk about the commodities. It's been a pretty big move taking place in some of these, especially relative to the S&P. So I want to go through that as well. And then we'll go through the symbol requests that came through. Let's go ahead and get going now. Okay, so I've got my grid of deer up right now. And monthly, bottom left, weekly, bottom right, daily, upper right, hourly, upper left. All right. Now, I want to focus in on the weekly for a second and just talk about a few things that I think can be helpful. All right. So when we get volatility in a market, what ends up happening is we get stretched away from the 18 or the 20, if that's your preference. So we get a directional move, right? And then it doesn't follow through and then it pulls back. And in fact, when we get too far away from the 18, we should expect it should act like a leash and pull whatever stock or market you're watching back towards that line. All right, so you can see what's taking place here. We spent several months actually chopping back and forth above and below the 18, getting stretched away. But then just recently, and a reason why I've been highlighting it as it kind of emerged out of here to my subscribers is that we instead of crossing above and below and not respecting the line, we started to respect the line here, and that followed an undercut pattern. Something that I actually talk about in my course. So what this undercut and rally is finding support at the 18, and then we start to emerge. All right. Now, when we're looking at a period where there is more volatility and maybe not as much trend, and even when there is trend, the 4 can be a pretty good advantage. And what we're looking at are periods where especially, let me just start here when we get the big green bar here, this monster green bar, and look at the error between price, especially on a closing basis. You see where we close up here and there's a lot of error because this is where the 4 is. So when we have that kind of distance, we should be on the lookout for a retracement back and at least a retracement back to it. Now, in this case, because it was such a powerful move, it had some follow through to it and actually had an extra day before it pulled back. And when that happens, a lot of times I expect it to break the 4 and then actually work its way back to the 18. But you can look for periods where we get sort of stretched. And here's where we've got a pretty good distance away from the 4. All right. And what this is going to help you prevent is chasing a stock that looks like it's breaking out, but it's stretched from the 4. All right. And so we should be looking for a retracement back down. All right. And then you can evaluate the retracement and see whether it looks like it's going to hold and continue or not. All right. Now, there's a couple other things that I think can be an advantage when we get a move that gets stretched away to the downside. So you can see here we have a rising 18. Right, we're coming in back into this support zone and we've had a pretty good drop. So if I'm a short-term trader and I see this is down 1, 2, 3, 4, 5, 6 days in a row and I'm stretched away from the 4 here, I should be on the lookout for a retracement back up to the 4. I mean, there's pretty good distance between that where for short-term traders, you can take advantage. You can also use that to your advantage when you get stretched away from the 4 and you have support from the 18. And we can do this in conjunction with longer term time frames as well. I'll show you that in a second. But one of the other things I want to mention is, and one of the patterns I look for is when the 18 and the 4 are parallel. You see how we basically had this drop and then we get a rally and then it starts to decline. Well, during this rally, it almost looks like a bear flag. It wasn't quite as violent to the downside to constitute a flag pattern, but we had this rally and the 18 and the 4 were basically overlaid amongst one another. When that's happening, we're looking for a move in the opposite direction. All right. Now, that is especially the case when the MACD lines are going in the opposite direction. I'm not showing that today, but that's one of the patterns out of my course, counter parallel reversal pattern. All right. So we want to be on the lookout for that when it takes place, when the 4 and the 18 are basically overlapping one another. But in most cases, what we're looking for is space. When there's air between the 4 and the price. All right. Price closes down here. The 4 is way up here. When you see that, you know you're not looking to play a breakout or breakdown. You're probably going to get some kind of a retracement. And if it's really far away, it'll probably come back not only to the 4, but through the 4 and work its way all the way back. Now, in this case, it ended up being a reversal and worked its all the way back up here, and then it reversed back down. So just be on the lookout for when you're getting stretched away. You see these moves where you get this monster green bar. Look at how far away this is from the 4 at the close. The following day, it has a little follow through, but then we get a big snapback. All right. You can see that here. Look at how the 18 turns down and the 4 is down here. And we get this close up here. Look at how far away price is from the 4. All right. So I say at the beginning, I said that when we get too far away from the 18, it acts as a leash. Well, when it comes to the 4, when we get any space around far away from the 4, we should be expecting a retracement within the next 24 to 48 hours. It should really come back to it. All right. It's very, very rare for it not. And you can even see when you get a trending move like this, we're making this move and it doesn't take long for it to come back and check back to the 4, right? Even when we get these big bars, it just doesn't take very long for that to happen. All right. Now, what you can do is use the 4 on higher time frames. So if I'm trading off the hourly chart, I can use the 4 to my advantage when I have this kind of a move here. One thing I want to point out, so this move right here, you see how we're making this strong move and then we're pulling back and then we make a strong move and then we pull back, strong move. So what's interesting about this is that this line, this 4, it's very close to correlating to the 18 on the next lower time frame. So this is essentially the 18 on the hourly chart, and you can go back and see that where these pullbacks are taking place here is right here. Those are the pullbacks to the 18 on the next lower time frame. So when I'm looking at a chart, I don't have to necessarily look at the smaller time frame because I know that if I'm getting these little dips, I know I'm getting a pullback closer to in the area of the 18. Also, when I see this rolling over, I know the shorter term time frame is rolling over because the 18 is turning down. All right. So you can use this in conjunction with the lesson from last week, and I think it could be really helpful. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on the services page right now. You can see at the top, I've got the advanced trend and momentum courses individually priced for lifetime access. Plus you could buy them as a bundle at a discount. And then also the individual package has about 2 to 3 reports each week, plus a special video commentary each week for that package. Also, if you're new to this approach and you want to just learn more about it, you can start with the book I'm offering at a discount right now. My comments are for educational purposes only. Please do your own research before making any investment decisions. All right, I want to start out with the commodities because I've got these all showing up at the same time. I've got about a year's worth of data for each. I've got the simple 18 and 40 on a weekly chart. All right. And then I've got the relative strength line versus the S&P with its moving average, a 30-period moving average. And I think what's kind of interesting is we've seen a really strong trend in gold, right? And this is actually looking like it's going to break out from this area actually finally on a relative basis. But it's been a pretty decent performer over the past, say, year or so, maybe a little bit longer than that. Relative to the S&P, it's had a pretty good move. But most of the other utilities really haven't done much. So we start to go through these. Notice what's taking place. We've got a little trend line to the downside here. We broke that. And if we can turn up, get this to turn up. I think if we can get USO back up through 80, I think that would be a really good sign for oil and energy stocks. All right, so we want to really keep a close eye on that. But the overall price structure is showing a lot of improvement. Look at how silver has been moving up since we started the year. We've turned this to the upside. This is in a very good trend. Not quite as strong as gold, but it's in a pretty interesting pattern, and a lot of the individual stocks look good as well. We've gotten a little bit of a lift in soybeans, and that is showing a little bit of an up move here after undercutting this low, but it has the makings of a turn, but it's probably a little on the early side. Now we can draw our downtrend line and see we have broken the downtrend, but we probably need to see this make a higher low before it's convincing. But look at the move in corn. We've clearly broken that downtrend with some dynamics behind it, and we're seeing that in the improvement on a relative basis. All right, wheat is more like the soybeans right now, showing a little bit of life, but not enough to turn the corner. We're going to need to see a higher low form after breaking the recent downtrend line. Now it starts to get interesting, though. Look at what's going on with copper. Copper is showing a really nice double bottom at 25, and then strong move to the upside here that I think is a really encouraging sign on this one, especially with the improvement in the relative strength. I would be watching to see if we see better action in the copper stocks here over the coming weeks. And then you can see cocoa. I mentioned this the last time I did this. It was about 2 or 3 weeks ago, where we showed strength to the upside in this, and we've been consolidating back towards the 18-week. This is still, on a relative basis, still holding up pretty well. Also looks pretty attractive. So a lot of improvement when we go through and we look at all of these commodity charts. So I think it's something that's worth taking notice on. All right. All right, let's switch over to our 4 charts approach and this grid with a monthly here, weekly here, daily here, and then this is another weekly chart. But this weekly has the MACD and the ADX on it. All right, with the volume. And this chart has this zigzag. You can see this zigzag forming in red, okay? And I think it does a really nice job of giving us a feel for what's taking place in the price structure. So when we look at the QQQ, yeah, we've had some sharp dips, but we have not had a reversal. And when we look at this pattern, it was an ABC here, and then a simple pullback here, simple pullback here, another simple pullback, and another simple pullback. We don't have any shift in trend at all on this time frame. Now notice how the relative strength has actually resurfaced here. But what we want to watch and see is if we get any kind of a violent move on a relative basis, back down through this sort of support zone on a relative chart, right? If we look at this on a relative chart, I think if we see this come back down, this black line come back down, and we see this moving average roll over, that would be a pretty big negative for the QQQ, I think, for now. And it probably is going to be a negative sign for the general market when we look at it from an index standpoint. I would bet, though, if this turns down, the average stock could actually play a lot better. It could be a small cap could start to show signs of improvement. Let's take a quick look at the IWM right now. We've got a pullback to the support area from this breakout, but we're still not seeing the type of improvement on a relative basis here. The black line is the relative strength line. We need that to come break out above these prior peaks to get things going. But the pattern is in a pretty good position. It just doesn't have the strength yet to kind of kick in. So it's something we got to keep watching, because the moment that takes place, I think the environment's going to improve pretty dramatically. Certainly something to keep an eye on. All right, so I got a number of requests this week. I want to make sure I cover them all. First was the Nifty 50 India Index, and I thought this was just such a great example worth discussing briefly. Look at the strength of the upside with ADX. All right. Now, this correction, this pullback back to the 18-month line has caused the MACD to cross down through the signal line. So when we have strong momentum here, but we have a turn down here, what am I looking for? I'm looking for some kind of a move up and then a comeback, and then we're going to come back down and test this area and see if it can hold. Now, it's possible we could overrun this a little bit, but I'm expecting some kind of a zigzag to form. And until we get back above the peak of that zigzag, we don't really want to be playing too aggressively in this. Now, if we look at the weekly chart, we've had a nice corrective pattern. We've gotten overrun through the zero line in MACD, but we don't have a lot of selling pressure in ADX. ADX is low during this decline. Red DI is above the green, but it's not like it's breaking out and showing a lot of strength. So what I'm looking for is a little bit more of a confirming evidence. I want to see this move up, and I'd like to see it break a downtrend line and then form a higher low and then turn to the upside. And if we see that take place as we're still holding the 18-month, I think that would be a very good sign for this index and probably for this market. So those are kind of the keys I think we need to keep an eye on right now on the Nifty 50. Okay, let's look at BMY. So I am encouraged, and let me just show you one of the things that has improved my outlook on this. So this is the peak, and we've got our zigzag here, right? And then we make a dramatic new low. This is the anchor point for the trend line. So I'm going to draw a trend line that's going to connect to that line without passing through prices. And as I do that, I've got my trend line in, and we've broken that. All right. What's missing is we need a pullback and a test, and preferably a test a little bit closer to the 18-month. And I think if we do that and turn up, I would say this is a lot of improvement. We've shown improvement on a relative basis. I do want to see the RSI 20, the red line, hold above 50 during this pullback. And if we can do that, and I think hold the 18-month as it's cupping around, and I'd like to see MACD hold the signal line, I think those would all be encouraging signs because we've gotten new signs of improvement on the ADX. So that what we're looking for is a higher low to form, all right, and turn back to the upside. And I think if we get that, I think there's a pretty good chance that this is going to see higher prices. So the dynamic move off the low is what puts this in play, and that's what shows the ADX kicking into gear here. All right. All right, let's go to the next stock, this Fortive FTV. Nice base has formed. Look at the size. Look at how long this has been doing nothing. All right. And I really like to look for stocks that have been doing nothing for a long time, as long as there's not a lot of violent selling and there's not a lot of volatility. We formed a little cup here, a little saucer pattern. And I think if we can emerge from this, we survived earnings. All right. So now if I go and look at my zigzag, I think if we can make a higher low here, come back up through this high, that would be a pretty encouraging sign. This is definitely a stock I would be watching pretty closely for another turn to the upside. I'd like to get a little bit more confirmation, especially based on the environment we're in right now with all the volatility. Now, Lam Research, I think, has had a deep pullback. It overran the 18-month a little too much. And notice what's taken place. That 18-month is flattening out. You see how that's starting to flatten out a little bit and losing its strength? So I think we're going to spend a little bit more time consolidating in this. Doesn't mean that it's going to break down and fall through the support level that it has underneath, but I don't expect this to immediately emerge. I think it's going to take a little bit more time. It probably rallies up, comes back down. So treat this as a stock with overrun in MACD on the monthly, which means we're going to need a little bit more length to the consolidation pattern on the weekly chart. So that's kind of how I would look to handle that. Okay, so I mentioned improvement in copper when I was going through the commodities. I think this is a very attractive pattern, but it needs to get through this 10 area. I think this consolidation pattern, we've got earnings coming on the 19th, so you want to be aware of that. But look at the size of this base, and this has been holding up exceptionally well versus a lot of the stocks in the copper area. So getting back up through 10, I think, would be a sign that the game is on here, and this big base may be starting to emerge. Look at CDE. We've had a pretty good move off the low on the monthly chart, all right? And then if we go and look at the weekly here, we clearly emerged and we've been working on an uptrend to the upside. Now, it's been sort of volatile, but there seems to me like there's pretty good support down here in the 5.5 to 6 region, okay? And we did give an RSI buy signal after getting a pretty deep oversold reading. So I think that's an encouraging sign as well. What I'd probably be looking for is a higher low to form. One more little pullback and higher low to form like that. MACD is turning here. This is a low ADX condition and the volume pattern is good. So we're just looking for entry. We could look for a little higher low. Might have to wait for earnings to go first though. We're getting a little close from that standpoint. Yes, this is a big base breakout developing. Look at the volume, average volume improvement. This is significant. And now it's just a matter of entry. I'd love to see this form, again, a little dip and hold the 18-week and maybe form a higher low or something like that. But we're looking for an entry pattern. Again, on the 19th, this has earnings. So you just want to be aware of that. But I do like the bigger picture pattern on this. The momentum on this is really powerful with this rising on the monthly and then on the weekly holding above 25. Those are really good signs on from that standpoint. Okay, if we look at this ASAN, we've been basing for a pretty long time. We're coming up against the 40-month moving average. And typically I would say, hey, we kind of want to get through that, but I want to go and look at the weekly chart to determine whether I want to play it or not, because this is showing a lot of strength. The volume pattern is good. I think we can break through that 40-month moving average given the right set of circumstances. Now, what I'm looking for is a little bit more confirmation on the daily chart. We've shown a little bit of a downtrend. We're trying to turn the corner. I'd like to see this hold one more time at the 18-week line and turn up and form my higher pivot low right here. And I think if we do that, we're going to be very close to getting back above the 40-month moving average. And we're going to confirm that this pattern is turning to the upside. It does look like we've already given an RSI buy. So there's a lot of encouraging signs with this. This is a stock that I have highlighted to my subscribers, but we're waiting for a little bit more confirming trigger sign. All right, last stock is this BDX. It was showing signs of life, but then on the earnings, it really got hit pretty hard. I don't think this is quite ready yet. I think the 250 mark is the key here. You can see where 250 has become problem. It didn't even quite make it there, and then a problem here. All right, so we need to get through 250 and then maybe look to play a pullback or something like that. First order of business is making sure this can hold the 220 level, but there's nothing to do right now in this stock. Thanks for joining me today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just go ahead and put them in the comment area below. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.